First off, there's a lot of confusion regarding the terms as far as how you register, what exactly you're registering and what does it mean. Whether you're registering a business, a partnership, or a company, right? People wonder, just even why do we need to get registered in the first place? And I'm going to address some of that, but Companies Office of Jamaica refers to businesses as sole traders, sole proprietors, or individuals operating as a business name, i.e. Myself, Dmitri Dawkins, if I want to run Dmitri Dawkins haberdashery downtown or anywhere, then I could just register a business name and operate as Dmitri Dawkins haberdashery. But the fact of the matter is that is really me as an individual running this business, and that's me participating in business-like activities. In other words, buying, selling, providing services, etc. And it's not a company, which is a separate entity overall. So if it is that you are currently operating as a freelancer, you are operating as a sole trader, it's just you doing something, whether full-time or part-time, you can register a business name or register officially as a sole trader with Companies Office of Jamaica to operate, right? To operate as a business. You can then, it doesn't have to be your name and the activity, it could be anything. It could be, you know, XYZ, Jane Doe operating as Acme Inc. Because Acme Inc. is the business name and you can register that business name at Companies Office. But really and truly from a legal standpoint, it is Jane Doe who is operating, right? I like to put it in context as being two sides of the same coin. You know, we could pick up a coin, you have one side that's a face and the other side tells you the value of that coin. That's exactly what a business is in the view of Companies Office. It is that you have joined, you have decided to have a commercial side or a commercial face to your day-to-day operations. And so you have registered this business name and you're operating as a business name, but it is still one single entity being that coin. Now, when you shift over, there's partnerships. Partnerships are registered between multiple individuals. Here in Jamaica, you'll find that many law firms and many accounting firms are partnerships where, let's just say, you know, you have a particular skill or trade and you have decided to join up with this person to operate as a singular entity. So it's multiple individuals working together to execute business activities. So Jane Doe and John Doe, as brother and sister, decide that they're going to start their own family business. They form a partnership and the partnership operates as Acme Inc. going forward. If anybody has a better suggestion for like a business name, please let me know in the chat and we can switch over to that. But I'm just remembering the original beep beep days. Yeah, so partnerships are just exactly that. You know, you and I agree to work together on this. We're going to mutually get this done. And we've decided that this one single entity is going to represent both of our interests as a business overall. It is still, so from our operational perspective, what that actually means is that it is still just these two people doing this trade, service, buying, selling, etc., manufacturing, tours, services, running a restaurant. You think of it, it can be run as a partnership overall. But the fact of the matter is that it is still just representative of those two individuals. Now, this is separate from a company because companies are separate legal entities from their founders. So for operating as a sole trader with a business name, if when you do get a registration, let's just say that your TRN is 1, 2, 3, 4, 5, 6, 7, 8, 9, it will normally be like /0 or /1. So that way to signify that this person is also operating as a business. But when you register a company, it's given its own TRN number to represent entity. It is its own physical entity. It can actually be deemed as a person where it has similar rights to a person when it comes down to financial financial matters and dealings, and it's usually with limited liability, meaning that you can have a limited liability company. Most of us here would have seen, well, we'd have done business with companies, looked at the receipt and it says XYZ Limited. That means that that company is registered as a limited liability company. And so, well, I'm going to get into a little more detail of that, but basically the founders, whether that be an initial sole trader or partners that have shares in that company, they are not fully exposed if things happen to the company itself, because the company is a separate entity. There are many pros and cons with regards to how it is whether it is you should register a business, a partnership, or a company directly. And I'm going to get into a little more of this. If this is too high level or too detailed, please let me know via the chat or raise your hand and unmute, so that way I can spend more time on this and make sure it's very applicable and valuable to you. So let's talk about some of the risks to registering a business or a company. I started speaking about liability a while ago, where sole traders or partnerships have direct liability and run the same risk as operating unregistered from a liability perspective. Meaning that if you sell someone an item and that item turns out to be faulty, and somebody comes back to you and says, hey, this item is faulty, I need my money back, you are liable for giving that person a refund. Or heaven forbid, but let's say somebody's injured by that item or product or service, or you hired someone else and then they think that, hey, you're responsible for this injury caused, and they decide to sue you, you have direct liability if you're operating as a sole trader or partnership. And it's also the same liability that you run as being just an unregistered individual just offering a product or service. So that's one aspect. Something that always comes up, Dmitri, I'm not going to get registered because that's when the tax man is going to come for me and I have to pay all these extra fees and it doesn't make sense. From a tax perspective, especially here in Jamaica, our corporate income tax is 25%, or personal income tax rate is 25%. You have the same exposure operating as a business as operating unregistered. What many people have gotten used to the fact is that they are in fact non-compliant from a tax perspective operating as an individual, meaning that I did this product or service, I charged my customer $10,000 to do this, the customer paid me $10,000 and and it's completed. But then you as an individual, you didn't end up paying any income tax on that. It just went to your bank account, or maybe you took the cash and spent it on, day-to-day expenses, and it wasn't ever recorded. That does not mean that that is legal. So I just want to highlight that first of all. As individuals, we all should be contributing to the tax net. Jamaica has a huge taxation problem which I'm not going to get into a lot of detail here, but the fact is that taxes are as high for those who are compliant because we have a high amount of non-compliance for tax. So from a tax perspective, number one, if you are liable for tax, congratulations, because that means you're making a profit. If it is that you are not profitable, i.e. you don't have any money left over after paying after generating revenue and paying your expenses, you have not generated a profit, then you don't have to pay tax. If your expenses are equal to, or actually there's a threshold, a $1.5 million threshold for both individuals and for businesses now, that if you generate less than $1.5 million worth of, if you don't exceed that threshold, right, then you don't pay tax on that. $1.5 million tax threshold is not, for companies, is not a revenue threshold, it's a profit threshold. So if you did 100 million Jamaican dollars worth of business last year, but you generated $1 million worth of profit, then you're below the threshold. If it is that you were an individual and you made $5 million last year, then you're taxed on the what's above the threshold, which would be $3.5 million. So being registered as a business or a company does not give you any increased tax exposure any at all. It's the same exposure. It is just that it's more oversight and it's less likely for you to slip through the cracks. But I think that all of us as citizens of Jamaica should play our part when we exceed the thresholds in order to keep a functioning government and society going forward. To address the compliance risk perspective, people are like, oh, you know, government love fine you for this or that or the other. You file something late, you get fined. You submit something late, you get fined. You don't include all the information, you get fined. Well, you know, fines are only applied when you miss deadlines. And it's when you first register a company, company's office has improved dramatically. I registered a company last year, March, and it's amazing. They gave me like a 5-page brochure that outlined when things were due, what the next steps should be, what things I should be paying attention to. They have tips and tricks on the website before you submit it. They're actually helpful with calling. I received a call earlier this year when it was time for my annual return to remind me to file my annual return and not incur any fines regarding that. And so if you keep the right schedule, most of us are using smartphones or, you know, calendars, etc. You just put in on the date, prepare this document, and then another date for the actual submission when it's due. And that way you can avoid any fines and not increase the cost of doing business overall. The final point, as far as a risk to registering a business, I think is the biggest risk overall, and that's having bad partners or co-founders. And the fact is that most times when people go and register a business, they're like, hey, XYZ, you and I came up with this idea, let's go and start this business. And that's great. And I hope that more people can collaborate and form businesses going forward. But at the same time, we need to put in some stopgap measures in case things go wrong. And that's normally done as a shareholder agreement. A shareholder agreement is, as the name implies, agreements between two people that form a company or own shares in a company, and it governs what happens if one person decides to leave, if one person is not pulling their weight, if there's a disagreement between the two founders as far as the future of the company or day-to-day operations of the company, things like that, to govern the partnership and govern how the business is run overall. So this is critical. You need to be very careful about who you're starting a company with, vet them, make sure that it's something you definitely want to do, and then subsequently have a backup plan that just in case, that shareholder agreement that says, if things change in life for either of us, this is how we're going to manage this going forward. And I'll use the example of a company that was actually seeking financing, and they got some investors. The investors are like, hey, okay, let's go, let's issue some shares at Companies Office of Jamaica to reflect stuff, and show me exactly what your existing shareholder agreements are like and who you have as partners. And this person had an initial co-founder who had 40% of the shares of the company, but after the first 3 months of the company had quit and left the business, but still owned these shares. And it really complicated things for that company with raising additional capital, because 40% of the shares were owned by somebody who was no longer contributing, not a part of the process. And when they learned that the company was attracting investment, decided to really hike up their price to exit the company overall. So you really have to be careful. And I think that's the biggest risk to starting a business. If you want, you can always start off by yourself, being the single shareholder. And then there are things like vesting agreements and other agreements going forward, which are a little advanced, but let me know once again in the chat or something, and I'll add on more detail about that. And so you can add on like key employees, give them some shares over time, or bring on a partner in future when you've identified, or if you have a partner now, then have that shareholder agreement. So I prefer to recommend to people to register a limited liability company because of the risks associated with having a partnership or having a sole proprietorship. And that's just because it really is so risky, especially as an early stage founder. As a bit of a background, many of us would have heard our parents or other peers or grandparents or whoever talk about the fintech era and the fact that people lost their homes and they lost their businesses and had huge debts that followed them even though that their business was wrapped up and things like that. And that's because a lot of the companies signed very bad deals at the time. I mean, well, fintech overall was a horrible time period in the late 90s, and then even into the early 2000s when we had the crashes thanks to Olint and Cash Plus and all these other players. But the fact is, not every business is going to succeed, and so we have to plan in accordance with what if things fail and what if something goes wrong. And that's why limited liability companies are so great. If you are operating as a sole trader and things fail and you have a lot of outstanding debt, or let's say you have a huge liability, meaning that somebody has sued you for a large amount of money because you have not completed something, or let's say there's been an injury or a failed transaction or some form of business agreement and you are going to go bankrupt. When you have registered a limited liability company, then that entity is responsible for that debt and not you personally, which will allow you to liquidate that company and close that company, and you can later on go and start other endeavors and move forward in life, of course, with the learnings that you've had from this failed entity. Once again, it's very unlikely that your first company is going to be a huge success. Also, many people are serial entrepreneurs and you might want to try multiple things, multiple ideas over the years, multiple businesses, maybe even in multiple jurisdictions, or maybe you're contributing to multiple businesses where you may be co-founder to in multiple businesses. Limited liability companies allow that business to be standalone and separate and apart from you, so that when people are doing business, they're doing it with that entity. Yes, you are a director of, or a shareholder of, or an employee of that entity, but at the end of the day, the risk stands with the company and not you personally. There is still some what's called fiduciary risk that's extended to you as either as a director or a shareholder. Once again, a little more advanced topic, but really and truly I would recommend to every single person when starting a business, skip over that sole trader aspect, skip over that business name registration aspect and go straight to limited liability, because if something goes wrong, that's really what's going to save you, right? From the point of view of, like, for instance, lawsuits or other things, once again, as a limited liability company, that lawsuit remains with the entity itself. So unless it's determined that you directly through your actions were responsible, then the company is responsible in that lawsuit and not yourself as a director or a shareholder. Not in all cases, it depends on how the lawsuit is filed, but it has some pretty broad coverage. And finally, for transfer of assets, if I operate the Dmitri Dawkins haberdashery, in Main Street, in whichever, all of our towns across Jamaica have a Main Street, and I wanted to sell that haberdashery to someone else, I couldn't just do that because all I have is a registered business name. So they would have to, well, I guess I could transfer that registered business name to them, but it's not a business in itself, it is just a name. Whereas when you have a limited liability company, you can process a sale of shares to sell the company itself, or maybe even from a estate planning or generational wealth aspect, you can leave the company to your kids to take over, or to other family members, or etc., etc. So think of the company once again as its own entity, and you can now sell the entity itself as a business to a third party or transfer it to a third party because it is an asset that you own. Whereas if you're operating as a partnership or a sole trader, it is not, it doesn't have the same implications for or ease as a transfer of assets going forward. All right, let me just quickly check the chat. Kyle adding that it's good to give yourself a reminder a couple of weeks ahead of time to prep for tax and other statutory submissions. Yeah, thanks, Kyle. And I'm also going to be talking a little about the company secretary and the role of the company secretary, because that's someone that's very critical as part of the process. So on that note, what you need to register a company, you need a company name, which is subject to approval. So when you first put in your submission with a name, number one, you can do a search ahead of time first through a business name registration and online. So where company's office will double check that if there are any companies with similar names operating in the same industry, and let you know if you can go ahead to register that name and reserve that name for a period of 90 days. You will, and then of course, if there is a clash, they will provide you with advice as far as the fact that you need to change it or what it clashes with, so you can avoid that overall. You need a registered address for the company. This can be a PO box address. I highly recommend going with a co-working address, because at least that entity will have people there collecting mail regularly. It's nice to pop in and out, and you have a sort of networking opportunity. I personally chose the Kingston Creative Hub downtown. It's a great co-working space, but you can choose any of the co-working spaces around Kingston, or as I said, a PO box or your home address, or whichever address that you prefer. You need at least one director of the company and a company secretary. So a director does not necessarily mean a shareholder, but a director is the person in charge of this company from a fiduciary perspective, meaning compliance, the activities that are going on. For example, like initially when you're naming executives, then okay, let me use an example. If you guys have seen anyone with the title of managing director, executive director, or just even, yeah, but typically managing director or executive director, those people usually are directors of the company. They might have board seats, or they might have just registered as a director for the company, and they're also operational in the company on a day-to-day basis, right? Whereas somebody who's just a director tends to be there from a governance standpoint. But when you form a company, usually you yourself as the primary shareholder signs up as a director as well. And then you need a company secretary. A company secretary is honestly the person that's responsible for the compliance and governance of the company. It's not the person who sits in the meeting and writes down all the meeting notes. Yes, they may or may not do that for board meetings, but the fact of the matter is that the company secretary is legally responsible for making sure that your annual reports are going on time. The company secretary is also legally responsible for your tax filings that go in, to make sure that they're going on time as well, and that there are adequate compliance records for the use of the company seal, for annual reports that might go out, for the ratification of meeting minutes for board meetings if you do have those, and for changes regarding the company. So if it is that you are changing your registered address, the company secretary has to sign off on it. If you're opening a bank account, the company secretary has to sign off on it. If it is that you are issuing more shares or adding a new shareholder to the company, a company secretary has to sign off on it. So the trend I've seen is that many people say, oh, I need to start a company, but I don't know who to put as a company secretary. Hey, brethren, can I add your name as company secretary? And they say, yeah, sure, no problem. Your company secretary is probably like one of the most, well, the company secretary is the most critical person when registering your company, because they have so much responsibility and so much authority regarding the operations that you need to choose the right person, and not just somebody who you can't find when you really need them, somebody who's not going to pay attention to your compliance activities, somebody who's not willing to take on the responsibility of being a company secretary, and somebody who genuinely needs to understand the process, right? Because just asking your friend to sign up as company secretary is not doing them any justice, any at all, and it will lead to complications and conflict in future. All right, on that heavy note, articles of incorporation. Oh gosh, what are these? I mean, this sounds absolutely alien and foreign. And to be frank, it's a very long, well, multiple documents that are very long and boring that govern exactly how the companies run. So this could be things like how often you need to have, well, the fact that you need to have an annual general meeting, how it is that you issue new shares, how it is that board meetings are run as far as voting, how is it that, you know, do you need a consensus or a unanimous decision for a vote to be put through? What requires the approval of the board versus just can be approved by the executive team? Like even as far as just even the shareholder agreement, the articles would then define the authority of the shareholder agreement going forward. Now, this can be very, very complex. I implore everyone to read the articles of incorporation before creating the company. And I say this being that Companies Office of Jamaica has what are called standard articles available that meet 99.5% of use cases for companies. In other words, you don't have to write your own, you don't have to find some new ones and go and submit. There's a standard template that you can follow. It's literally on the form as adopt standard articles, and you just tick it off and that's it. But from a compliance perspective, you should read them and understand it to know how it is that what governs the company and the operations overall. And if necessary, if changes are necessary, then, you know, consult a lawyer about the changes and submit your own custom articles when you're registering the business. I don't mean to scare you. It sounds very scary, but I promise you it actually is not. Just have a simple read, go with the standard articles if you don't fully understand it. Later on, you can go through with a lawyer or someone else to explain more detail. If it is, once again, we have one-on-one sessions with our business development organizations being Sisters Inc. And Paramount, as well as Companies Office of Jamaica, that you can ask direct questions about the articles or anything else and feel more aware or more comfortable with them. And then you can always change them. So it's not set in stone. You can submit a request to change your articles, you submit the new ones, and it's modified, and that's the end of the story. Well, not the end, but you've completed that task at that point. The final thing being the number of shares to be issued. Oh, wow, I just created this business. Yeah, man, I'm going to issue myself 1 million shares. Not necessarily the best idea, especially if things go bad, because what happens is that to cancel those shares at Companies Office comes at a cost. So I'd recommend that you start off with a much lower number, let's say 250, 500. Don't do 1 or 5 because that's way too small in case you need to do any, you know, you're bringing on another co-founder or you want to give shares to an employee or something in the future. But yeah, just choose a nominal amount and issue yourself some shares. As I said, like 500, so that way you can get this company rolling. But if you were to make the mistake and say, okay, I'm going to issue myself 250 million shares, I don't remember what the exact fee is now, but it would probably cost you well over $1 million to wrap up that company or to cancel those shares that you've issued yourself. So if this is just I'm formalizing this to see if it will scale and grow, but I might lock down the company in 1 year or 2 years, then issue yourself a smaller amount of shares up front. You can always issue more shares in future. It is not a very expensive process to issue shares, but if you have too many, canceling shares can be significantly expensive. So I'll just warn you on that. What to avoid when registering your company. As I mentioned before, don't choose random associates to be a company secretary at all. Like, please don't. Don't issue yourself a large amount of shares, say over 1,000. Keep it nice and simple. If you need more shares in future, then you just modify it. But for now, keep it simple. And then finally, adding directors that are not beneficial to the business. Okay, great. I'm forming my own company. And you know what? Everybody says that you should have a board of directors. So I'm going to add a board of directors right now as well. Let me call Uncle Joe and, you know, Aunt Sue and, oh, my cousin is an accountant, you know. Yeah, let me add him as a director as well. No, guys, it's a bad idea to add random directors to the business, especially if you don't have a working relationship. I would recommend to everyone to at least start off with a sort of mentor relationship or an advisory board first to build a rapport with his team before adding them as directors, because not everybody is beneficial to the business. And especially at the early stages, you need people who are going to help propel the business and go forward, and not just be there for the sake of title or affiliation in that sense. So there's nothing wrong with starting off your business with just yourself as a director and the company secretary, and over time, as you feel comfortable, when you know that somebody is significantly contributing to your business from an advisory and governance role, then add them as a director then, and especially people who understand the responsibility of being a director of a company and the fact that it comes with fiduciary responsibility as well with being a director. So simple things to avoid, right? Things to do when registering, right? So Kyle had mentioned earlier, you know, making notes of the dates. Yeah, make calendar reminders for your compliance tasks. Stuff like, okay, 1 year from now, we need to do our first annual return, and other small things along the way. Once again, there's a great brochure that's given to you when you first register your company, outlining all the dates that you need to pay attention to, all the steps that you need to pay attention to. And Companies Office legitimately, I don't know if before, but in the past year, they've been very supportive of the new business registration process. Opening a bank account, it is so much easier to open it in that first 2 or 3 months. So when you register a company now, you're immediately registered with, you're given a TRN, you are registered with NIS, and you're given a TCC, meaning a tax compliance certificate. To open a bank account now, I mean, besides having to give up our firstborn child or something like that, you have to have a TCC, of course, the certificate of incorporation, the articles, and well, the IDs, proof of address, etc. If you do it off the bat, it's way easier to get started. I can tell you, even personally right now, I'm having a harder time opening a bank account because I have a full board of directors versus if it was just me being director and company secretary. It just gets it out of the way. Open a bank account and then go from there. Even if you're not using it, just set it up and go from there. You also need, from compliance perspective, you need a company seal. There are a couple of different stamp places around Jamaica that will make that for you. It sounds ridiculous, but really and truly, if you sign certain agreements and you don't stamp it with your company seal, then it's not official. And actually, there are ways to get out of agreements based on that because it's not proved to be approved. Whereas if something is stamped by a company seal, it is super official and it's very hard to exit that agreement. A company seal does not have to be fancy. It could literally just mean just your company name, let's say Acme Inc., and say the word seal on it, and it stamps, and that's it for physical documents. I don't know of us having a method of doing a digital seal yet, and I've seen a couple of people do it by adding a scan of their actual company seal into Adobe PDF and just applying it like a signature. Really nifty, but the problem with that is that you're actually supposed to have what's called in your company register, you're supposed to make note of when the seal is used. And that is because if somebody was to fraudulently use the seal and it is not recorded in the company register and signed off on by the company secretary, you could say that it was fraud and therefore the company is not liable for that transaction or deal. So moving on to that exact company register, the company register is going to keep a track of things like if you have any annual general meetings, the use of the company seal, if you have any shares issued to new people, any change of directors, things that will happen that you might need to report to, well, you will need to report to company's office within a certain amount of time, but initially you just register it in your company register from a compliance perspective on a quarterly or annual basis. Even at your annual return, you can then file all the changes that have happened throughout the year. Yes, exactly. So meaning you don't have to go to company's office every single time you've made a change. It is advised to update things as best as possible. But if you record this into your company register and sign it from your company secretary, it's counted as official as well. Once again, from a digital perspective, this could be a single document stored in a folder in Google Drive or in Dropbox or something else. It's signed by the company secretary and affixed with your digital company seal and form part of your virtual company register going forward. The other thing to do when registering is just remember now you have a company. I remember the first couple of weeks after I first got registered, I was still putting stuff in my own personal name. So I'd, go on, when I bought my office chair, I got the receipt in my name versus the company name. That was a mistake. Make sure that company-related activities or company-related transactions are recorded in the company name and that you keep records. Keeping records does not mean that you have to go set up QuickBooks or Peachtree or Xero or whatever other platform. It literally could mean that you have a box on your desk and you drop the receipt in there and you eventually add it to an Excel sheet, or even if you don't add it to an Excel sheet yet, you have a record that this is where it is and you can find it for later compliance purposes, right? So let's not overcomplicate it. It can just be, if you buy one of those simple trays, keep it on your desk, what's to be processed and what's not processed, and leave it on top of the list, and of course, eventually process them. That's record keeping to some extent. When you can then shift that to Google Sheets, Microsoft Excel, whatever else. It can then later on get up into a fancy accounting system, but keep it simple. Just do what you can now, do what you're capable of and comfortable with, and move forward from there. The final thing is aligning your financial year to your operations. Okay, so we go to company's office here this month, June 2021, and we get registered. When we're about to file our annual return now, so at the end of the first year, when we have to just make a report as far as, hey, what's going on in the company? Are you operating still? Did you make any revenue? Do you have any expenses, et cetera, et cetera? Typically, that would be due in June coming. That's not always the best scenario for you. Most publicly traded companies in Jamaica either run on what the regular calendar year, which is January to December each year, or they align to government's financial year, which is April to March each year. You should consider doing either of those for the sake of, number one, for compliance. If it is that you align April to March, then therefore the annual returns and other returns are going to be aligned to the government's, and therefore it's easier to track and watch those announcements. But other than that, maybe it is that you have a seasonal business. Maybe it is that December is your peak month. You don't necessarily want all your compliance requirements in your peak or busy season. So if you're running a carnival-based entity and April or Easter is your peak season, you don't want to have to deal with all of your compliance at that time because you're busy trying to make some money. So shift your financial year for your company in alignment to, I think, what would be a low season. So if let's just say back to school, September is rough on your business overall and you don't have as much stuff coming in, then that allows you the time to spend more time on compliance because you don't have as much business on a day-to-day basis. Align your financial year at company's office to that. You don't have to do it upfront. Start a business, see what the cycle is like, and then adjust it after the fact. But I recommend that you always align your financial year to your operations to make that compliance aspect easier for you to manage. And so you don't have 1,000,001 things coming at you one time, which could literally cost you money in the case of fines or other things like that. All right. Let's just checking the chat again. Are there any templates for digital company register? I don't have any templates for it. So I don't know what to share, but maybe we could, Kyle, I mean, maybe you and I can work on it. I have something for that I use to record the use of my digital seal. And that way my company secretary, who is not based in Kingston, can review it and approve the use as well. So it's sort of like an approval workflow. So let's see if we can find one and share one. But to my knowledge, there's no publicly available template for a digital company register. But I think it would be very helpful. If anybody else wants to contribute to that process, let me know, and maybe we'll form a small working group or something to get that done. All right. And guys, keep the questions coming, and if it is that you'd like to speak, raise your hand or something, and then we can unmute. All right, what are some nice to have things but are non-essential? I always advise people to hire a lawyer and an accountant first. They should be the very first two hires that you have in a business. This does not mean that you have to shell out a bag of money on paying retainers and having people coming on board. The fact of the matter is that you find, I know many of the lawyers I know directly are very sympathetic to small business owners and are willing to come on board and just do quick reviews of things. Please remember to thank them. Their time is very valuable. And then the fact is they're actually making an investment in you as a small business owner, hoping that you're going to scale and grow. And then of course, pay them some fees later on based on any regular stuff that you need to do, such as employment contracts, such as your standard sales agreements with individuals or other companies, with reviewing other agreements that may come across your desk. So start building a relationship from early. Most lawyers are very willing to do that. And then many of them have like very reasonable pricing or SME pricing per se, to make it more affordable. But it's non-essential, right? You don't have to have a lawyer to start a business any at all. You can start off where you are and take it one day at a time. Same thing with an accountant. You can start managing your initial bookkeeping yourself. You're just keeping a record. How much money is coming in, how much money is going out. It's as simple as that most times. A balance sheet is a different scenario, but the key thing is I know that we made X amount of money this month, and I know that we spent X amount of money this month. That is the core of accounting, and using just those two things, you can complete majority of the submissions that you need to do to TAJ or Companies Office of Jamaica. Additionally, the minute you register a business, you are also eligible for what are called vouchers for technical assistance, courtesy of the Development Bank of Jamaica. That's at dbjvoucher.com. They have vouchers up to 200,000 Jamaican dollars to subsidize the cost of accounting services, digital transformation services, which can include setting up your e-commerce or building a website, energy audits, business plans, marketing plans, and a bunch of other services. There's a whole list of them that you can immediately access. So you can literally hire an accountant off the bat if you'd like by accessing that voucher, which will cover you for probably the first year. The other thing, as I mentioned before, a shareholders agreement would be nice. It is not required by Companies Office of Jamaica when starting a business, but you should set one up if it is that you have more than one shareholder in the company. If you don't have any other shareholder in the company, you don't really need a shareholders agreement at the time, but please, 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 please create a shareholders agreement before you issue any new shares to anyone else, so that way you can govern that relationship. Customized articles of incorporation, once again, you might have taken the standard articles now. It's not a problem because it's just you and your company secretary and maybe some execs. But when you start adding on new shareholders or new directors, you're definitely going to need to make sure that those articles of incorporation are applicable or in alignment with your vision of the company. And so you can consider customizing those articles in the future and filing them with Companies Office. And then finally, a board, it's strongly advised from a governance perspective to have a board of directors. A board of directors is not there to support you as a founder or a CEO or a managing director. A board of directors is responsible for the sustainability and growth of the company itself. So it's basically a way to balance yourself as the founder with the operations of the company, because you have somebody externally who's not in the thick of it on a day-to-day basis, who's reviewing from on a long-term perspective if your actions are helping or hurting the company. And so I strongly suggest that work with mentors first, build relationships, work with people who have proven track records, that make sure you do vetting of these directors, make sure that they can provide a positive impact to the business itself, and then later on add them as directors when you're sure, when you have that feeling in the bottom of your belly that, yeah, I trust this person, add them on. But your articles of incorporation are also going to allow you to remove that director or change directors over time. I've seen people put in that you know, all directors must resign on an annual or biannual basis every 2 years to just make sure that, you know, there's continuity and you're constantly updating your pool of directors going forward. So once again, nice to have, but non-essential overall. Compliance requirements. So once again, mentioned before, hey, there's all this stuff that, oh, if I create a company and suddenly I have to submit this to that entity and this to the other entity and blah, blah, blah. It's way easier now. I remember when to get a TCC, you'd have to go to NHT directly, you'd have to go to the NIS office, you'd have to go to tax office, you'd have to go to company's office, and get letters from each of those and bring them back to tax admin, and then they'll give you a TCC. Thankfully, those days are over. TAJ has brought everything under one portal online, with the exception of NIS. I'll add the caveat: if it is that if you don't have any employees and you're not paying NIS on a monthly basis, then you have to go to NIS and get a letter of no objection, meaning that they've spoken to you and they trust that you actually don't have any employees. But if it is that you are paying an employee, and let me highlight this, I implore all of you that when you form your company, add yourself as an employee and pay yourself. Make it a standard salary. It can be below the tax threshold of 1.5 million Jamaican dollars per year. So that way you don't necessarily have taxes, but or you don't have income tax, sorry, because you still have NHT and NIS, but pay yourself monthly. And so therefore, NIS will have your records. Any TAJ on the portal allows you to automatically put in your NHT payments and all the other entity payments off the bat. And then if you complete your company's office filing on time, TAJ can also automatically pull that record and give you your TCC. So to keep your TCC, you file your annual tax returns. When you first start your company, for the first year, you don't need to file any tax returns within the year, but at the end of that 1 year period, you file your annual tax returns. And then therefore you can maintain the TCC going forward. If it is that your TCC has expired and you need to renew it, what you can do is file something called a nil return. so that way they will reissue. Or if it is that you're not operating, meaning that you're not generating revenue or have not generated revenue since you started the company, then you can also just tell them that the company is not in operation. You can be going through a sales process, you can be marketing, you can be doing all these other things, but really and truly from a compliance perspective, until you receive that first dollar, you are not technically operating, right? Even if you're incurring expenses, even if you have employees. So if it is that you registered for GCT, you need to file your GCT submissions monthly. I recommend to people, if you have the bandwidth to register for GCT, and I say this because if you go out and you buy a Pepsi, soda, they're going to charge you GCT on that, even if it's a company expense. But the fact of the matter is, if you're registered for GCT, you can generate a GCT credit, meaning that I have been paying over 15% on all these purchases for this amount of time, and I have not billed any GCT. So therefore, I have a credit of GCT payments. So when you do eventually bill for GCT, you can offset that against the credit, and just in actuality or in fact, basically what you're doing is saving yourself 15% on every single purchase, because you're passing the cost of that GCT onto your customers. So once again, another practical example. Let's say you manufacture a product and you sell that product for $100. Let's, for the sake of quick math, and this isn't entirely accurate, let's just say that the product was $85 and then you paid an additional $15 in, sorry, that's going to bother me. You buy raw materials for $100 and you end up paying $115 because it's $100 plus GCT. You then sell that product to a customer for $150, but you are not registered for GCT and you don't charge them for GCT. So therefore, what has happened is that your input cost entirely is now $115. You sold it for $150, and so you have $35 back into your pocket. Well, your bank account, sorry. Remember, put it in your bank account. So whereas if it is that you register for GCT, you could sell that product for, let's say, $135 plus GCT. Quick math, I don't remember what that is. That's about $18, $19. So it comes back to say $155, right? $155 cost to the customer, but your input cost now is only $100, and you'd have still maintained that 35% margin, and everybody's tax compliant. So I strongly consider, recommend signing up for GCT as soon as you start generating revenue, or even beforehand. You can file your nil returns with the GCT submissions that you haven't generated any revenue, but you build up a credit for all of that GCT spent before, which is really nice, especially when your cash flow is tough and you need some extra money in the bank. The other thing is, make sure if you have any employees, including yourself, you pay your PAYE monthly. PAYE meaning the deductions from the employee's payslip and the employer's counterpart. So for instance, for NIS and NHT, there's an employer counterpart to those payments. Make sure you pay them on a monthly basis so that way you can keep your TCC. Another thing about paying yourself is that, well, I've been there. As a founder, you go to a bank and you tell somebody you're self-employed. They then pull out another book with another range of forms, and you can't get as high a limit on your credit card, and you can't get as high a mortgage, and you can't afford this other vehicle because they won't lend you as much money. However, if you're to register your company and pay yourself that very same salary through the company with some pay slips, then you're eligible for everything because you're now just an employee from the bank's perspective. This is an amazing hack. For those of you who have had to go through the process of trying to get access to any financing as a self-employed individual, it is a pain, and trust me when I say, just pay yourself a pay slip, sign it, stamp it with your own company seal, and move forward in life. Companies compliance requirements are pretty simple. File your annual returns. If it is that you're making changes to the number of directors or who your directors are, or your registered address, or the number of shares issued, or things like that, there are shorter periods that you have to submit that, but just basically complete those submissions within, I believe most of them, the requirement is 90 days. But other than that, if you have no changes on a year-on-year basis, it's just every year you're sending in I forget the name of the form, 19A possibly, that, hey, my address is the same, I have the same directors, and the business is still in operation, and that's it, right?